So, Hannah, we've had a lot of snow recently, which led me and my wife to trawling through some films the other night to see Armageddon, the classic 90s action film coming forwards. And we thought, it seems as if the media is talking about this snow being like Armageddon, so let's watch the film. And this got us into the conversation of, what's your favourite 90s action film? Of which Armageddon is up there, not only because of Steve Buscemi being pretty brilliant in it, but there's also a bit where someone turns around and goes, he's got space dementia. Whatever space dementia is. So what's your favourite 90s action film?
The Mummy's got to be my favourite. That was an absolute classic, wasn't it?
And then followed up by The Scorpion King with Dwayne "The Rock" Johnson in an early acting bit as well. Maybe we should branch this podcast out into movie reviews, but only of 90s action films. Hello, I'm David Udall. Welcome to the second Agonomics of 2025, a full week after New Year's Day. If you're a first-time listener, you love economics and agriculture like we do, and have been trawling podcast sites bemoaning, I still haven't found what I'm looking for, then hopefully this is the one to make you look no further, and you'll be stuck in a moment you just can't get out of. There's 30 previous episodes you can choose from already, covering all of AHDB's farming sectors, with topics ranging from input cost reviews, farm inheritance tax, succession planning, and beyond. In this episode, I'm joined by my AHDB colleague Hannah Clarke, who's our lead analyst for beef and lamb, to go through the latest figures for cattle and sheep released by Defra. Spoiler alert, both were at historic lows. So we'll be discussing the reasons why. Please follow or subscribe to this podcast to make sure you don't miss an episode. New shows drop every Wednesday at midday, and please get in touch. Comment on any of AHDB's social channels or email us, agonomics@ahdb.org.uk. So this is the part of the podcast where normally I'd be saying, and this is what we've been doing over the past week. But considering it was only a few days ago that we started back at work, we're kind of like ramping up. I'd say we're, accelerating towards the first corner of the year, getting everything in gear and moving forward. So we've got a lot of data that's being released. We're catching up after that Christmas period and bank holidays of all of the data that's being released, and we're starting to ramp up all of our work on our sector outlooks, which are going to be released through February, which we'll focus on as well. And you may have already heard me slip in some song titles. Don't worry, you're not imagining things. It's what we do throughout the podcast. We've got a mystery music act each week, and the identity of whom we'll reveal at the end. And good luck if you're playing along. It's a new year, it's a new start, so all scores set to 0. So we're starting again. I don't think I've ever scored very well on any of these that we've ever done, so I don't think mine was very far above 0 anyway. But back to 0, new year, new start. In this week's Agonomics, we are going to be talking about something that's sounds very simple, but is actually very interesting, which is just the number of sheep and cows in the country. So this is full UK results of livestock populations based on the June survey, so as of the 1st of June 2024. And as we gave away with the spoiler at the start of the podcast, both of these numbers for cattle and sheep were at historic lows, some of the lowest that we've seen for decades. So it's very interesting as to why. And we're kicking off with this as sort of the first main proper podcast that we have of this year, because I think these are going to be two of the most interesting markets as we go forwards. So it's kind of starting off with a bit of a baseline of understanding really in terms of where everything is and what it could possibly mean for the cattle and sheep sectors. So our lead analyst for beef and lamb, Hannah Clarke, is with me today. So welcome, Hannah. And we're going to kick off by talking about sheep. So Hannah, the sheep flock, what are the scores on the doors?
So the June survey, according to Defra, revealed that the total UK sheep population stood at 31.02 million head, which was down 2.5% from the year before. As you mentioned at the start, that's at an historic low. Certainly looking back at data to the 90s, we've not seen the UK population of sheep go to that level before. The main sort of drivers for this, or some of the interesting figures within that were the breeding flock. So this is the number of ewes intended for further breeding and the number of ewes intended for first time breeding as well, so ewe lambs. The number of total ewes was down about 3.6% to 14.9 million, which again is quite a low figure. And within that, the number of ewes intended for first time breeding was down around 9%. So that's quite a strong reduction in that category. We can then sort of start to think about producer sentiment within that. So is that an indication that sheep producers aren't looking to expand their breeding flocks? Or there will be some drivers as to why more ewe lambs would have gone for slaughter as opposed to being retained for breeding? Finished lamb prices have probably got vertigo this year. They've been so high. So I think that would definitely have been a driver for, people making the most of that lamb price and for maybe offloading some of their future breeding flock.
I agree with you, Hannah. We saw those high prices, that elevation in price through that sort of spring-summer period of last year. And my question is, as we start the year and kind of look forwards, is this the point of a commodity cycle and farmer decision-making and that sort of farm supply starting that commodity cycle? That we've seen high prices, farmers have naturally done the right thing that the market has been instructing them to do. They have sold their lambs to slaughter to take advantage of those high prices. That restricts the breeding herd, creates a tighter supply that's going to go forwards. Therefore, that will help to increase the price incentive further, whether it's making the price higher or just keeping it at the current higher level. Therefore, at some point, people are going to decide, actually, I can't keep on slaughtering my flock to take advantage of that because all I'm doing is killing sheep and therefore losing sheep. I can't then respond. At what point do farmers decide, actually, to take advantage of that, I need to start increasing my flock size? And that's when we start to move on the other side of the hill, as it were, and the market's dynamic starts to change, and that supply and demand dynamic starts to change. Now, it's not going to be 2025, is it really, because of the way that these numbers come forward and the restriction that we've seen. So it's interesting, and I suppose the longer term thought process, and if I were a farmer thinking, or anyone to do with sheep farming, thinking, what's my business plan for the next 2 to 3 years, given the length of time that the breeding cycles take, I think this is the interesting point of looking at it, going, well, in 2026, will we see an increase in the sheep flock because we've started to see that reaction of people wanting to take advantage of these higher prices, and therefore in 2027, is that when we see the full impact of that supply come online, and obviously dependent on supply and demand dynamics at that point. And obviously this is assuming, all of the factors are equal. I'm not going to get too econometrician about it within this, that there's more of a pressure further down the line. And is that, I suppose, the business planning risk from a farmer perspective that we're talking about here, is that short term, and I'm talking short term as in probably the next year, 18 months kind of short term in terms of breeding cycles, there isn't a huge amount we can do. The market is restricted because the flock size is restricted because all of those sheep were sent to slaughter last year. But will that then create the incentive to expand flock sizes for 26 and into 27? And therefore, that's the time period where actually, from a sort of cash flow perspective and from a farm business financial cycle, that's the bit where planning wise we need to be thinking about it. So if you're sitting there as a farmer thinking, what's my 3 to 5 year investment plan, that, I suppose, psychology of process is what we need to be doing now, not just thinking, oh, the market's super tight, I'm going to rake loads of money in, because we evidently see that the farmers are reacting in a rational manner, but there's only so far in that rational manner that you can go in terms of slaughtering your flock, because then you're just defeating your purpose as a farmer. If you're just killing more and more of your sheep, there's a point where you actually need to breed the sheep to be able to take them to slaughter. So are we in that kind of chain? Have I just talked rubbish?
I don't think so, but there's a lot to unpack there.
I've had 2 weeks off. I've just been sitting here for 2 weeks just over Christmas going, what's going to happen to the sheep flock?
Well, that's the question we ask ourselves all the time. Well, as we know, the sheep production landscape and the number of farms and the size of those farms and the systems used on those farms to produce sheep is very diverse. There's a lot of difference in scale. And I think that will be a key factor as to whether producers decide to expand or contract their flocks. There's an element of economies of scale involved as well. And trying to, estimate what that means for the total national flock is quite difficult. You said all factors being equal as well, and the thing with this, with one of the key factors with sheep production levels and impact on the market is, which is probably sets the sheep sector apart from others, is its impact of things like weather and disease. So the breeding flock can do X, Y, Z, but if conditions aren't right at lambing, if that then leads to higher losses, that can have a huge effect on the market and therefore the prevailing price for those lambs.
Well, I was thinking exactly the same, and as I was giving my kind of rambling monologue, that was the overarching kind of thought I had in the back of my mind, is it all sounds good and makes complete kind of logical sense if there was, as I say, a very stable environment for production. But we've come out of a disease-pressured year through 24 because we had Schmallenberg as well as sort of the onset of blue tongue. And that's going to be the key driver. And again, why from a sheep perspective, and this is where we get a little bit kind of, I don't want to sound too morbid about it, but that's why it is an extremely interesting market from a sheep perspective, because it does have that threat of the disease over the top of it. And that will be the thing that could throw out everything. So yes, there's a rational, logical, me sitting here as a neutral economist way to be able to think about how the market will operate. But the world doesn't work like that. We have these black swan events, and disease is one of those, and it can throw everything out the window. So that will be extremely interesting. But it is a dangerous place for the sector to start at through that cycle, considering these numbers are showing that the sheep flock is at such a low level. It is a risky place to be, irrespective of the disease pressure. And we've not even spoken about anything to do with like food security or trade or anything like that within it as well, which is an even bigger picture. And you get down to the conversation of, are we supporting the industry in the right way if farmers are making these decisions, and is it a risk to domestic food security, considering we are a very efficient producer of sheep meat. And as we've heard previously in our previous podcasts and before Christmas, especially from a halal sector point of view, there is a significant proportion of domestic demand as well. So, there is definitely an undercurrent of positivity in that sense within the sheep sector, but still some risks around it.
It will be really interesting to see what the December census shows, because of course these figures were produced pre-budget announcements and all of that happened in the autumn. So a lot can change, I would say, between the 1st of June and the 1st of December. It'll be really interesting to see what those numbers say about the size of the breeding flock.
Indeed. Right, we'll call it there for sheep. We are going to have a short break now to get the latest on the markets. And when we come back, we are going to be talking about cattle.
If you're in the market for another podcast to subscribe to, then look no further than our Manager's Special, AHDB's Food and Farming podcast. Recent episodes include a consumer insight offering on red meat labels and supermarket aisles, as well as a dairy special about our work with retailers to promote milk. If you're after herbs, or rather herbal lays, our shelves are stacked with sage advice on how to introduce lucerne and clover into your fields. In fact, we cater for all tastes, so you'll find sections dedicated to all sectors: pork, cereals and oilseeds, dairy and beef and lamb. And don't forget our middle aisle, where you can often pick up a bargain episode you didn't know you needed to listen to. Search Food and Farming wherever you get your podcasts. AHDB thanks you for your custom.
Hi, I'm Olivia Bonser, Senior Analyst at AHDB, with a look at grain and oilseed markets for the week commencing the 6th of January. Despite some support in wheat markets over the Christmas period, prices have been under pressure in the new year from a strengthening US dollar, technical selling and sluggish global demand. However, Russian wheat crop conditions remain in focus, with warmer than usual temperatures and excess moisture in key growing regions. Persistent hot and dry weather in Argentina is also raising concern over the country's maize crop, which is now in its critical development stage. For rapeseed, new crop prices are supported, with doubts over prospects for global rapeseed production in 2025, though forecasts of heavy soybean supplies from South America limit any major price increases. Over the next few weeks, weather in major exporting countries such as South America and Russia will be key in driving prices. The USDA will also release updated global supply and demand estimates at the end of this week. To stay up to date with the latest data and analysis across arable, red meat and dairy markets, head to hdb.org.uk and click on Markets and Prices.
welcome back to Agonomics. We are here talking about cattle and sheep numbers, and sometimes you can't make it on your own. So that's why I'm joined by Hannah Clarke, our lead analyst for beef and lamb, to give us the specifics and some of the detail behind the numbers. So we've talked about sheep. We've had a bit of a ramble about that potential commodity cycle we could be in and where we sit within it, but also some of the risks around disease pressures and how that could throw everything out of the window completely. But let's talk about cattle, Hannah. I mean, it's a similar picture, isn't it? I mean, we're talking about low figures for the sheep flock and the smallest figures that we've seen for 30 years, if not more. And it's a similar picture for cattle, isn't it, in terms of reduction in herd size and lower numbers?
Definitely. So the census put the total UK cattle herd at 9.4 million head at the 1st of June, which was a 1.5% reduction. One of the most interesting figures, again, out of this will be to do with breeding numbers and specifically the suckler herd. So we saw the UK suckler herd reduced by 4.5% to 1.3 million head. And that story hasn't really changed over the last few censuses. We've seen sustained reductions in the suckler herd, which won't be new news to most listeners, but that is continuing to reduce the number of cows that we've got in that breeding pool. But I mean, despite that, this year, we've seen really strong prime cattle kills, despite the fact we've seen continued reductions in the national cow herd. A few reasons behind that. One being more beef cattle coming out of the dairy herd. We've seen, improvements in those animals coming out in terms of genetics, in terms of carcass yield, which is adding more beef into the supply chain. On the other side of that, though, the number of suckler-born animals have been reducing, and we've sort of started to see that in registrations outweigh those increases in dairy beef. So we are producing more with less, which I would say is a positive story, but BCMS data for the number of cattle on the ground would suggest that reductions in prime supply in 2025 could be steeper than we'd initially forecast. Meanwhile, the dairy herd's been fairly stable. I suppose milk price, reasonable milk prices would have contributed to that.
And as we were talking about before Christmas on the dairy side, everything's pointing towards an expansion in milk production as well, with milk prices that have been supported because of high commodity prices as well as low feed prices. So you'd kind of think that dairy support, as you say, is going to stay because everything is pointing towards producing more milk.
Yeah, and that will have implications for the beef supply chain as well. Output of beef from the dairy herd has been growing, and I would suspect it will continue to grow for the foreseeable. I do wonder, though, when we might begin to reach sort of peak beef output from the dairy herd in terms of numbers. And I wonder when those gains will start to come more from the genetic side of things in terms of meat yield and carcass yield rather than headage.
So taking all of those factors combined, Hannah, we've seen an odd period in cattle prices, haven't we, really? That the market has been kind of pointing one way, and yet that we've been getting tighter and tighter and tighter, and the price has been going up. So we've been 5.50 pence a kilo-ish around towards the end of the year for pretty much every geography and cattle type as well, which is pretty much unprecedented in terms of price. And if we're expecting that things are going to stay tighter, and I think I might have mentioned this on a podcast kind of like towards the end of last year, is this the new norm for prices now? Whereas we're talking 5.50 as being pretty unprecedented, but actually given the structure of the industry and given the supply dynamics as we've been talking about going forwards, everything remaining tight, is actually £5 a kilo now the base of the market. And that changes the budgeting and the financial side of a cattle farm completely. But obviously on the flip side of that, that is obviously, we're not factoring in the higher costs that we've seen and the inflation that we've seen over recent years as well. So there is the flip side of that. It doesn't mean that suddenly there is a huge amount of cash pumping its way into farmer back pockets because the price has gone up, because we know the cost of production has increased as well. So is this almost a bit of a balancing act? And we've kind of seen it before in the dairy sector where the milk price increased just to incentivise farmers to produce milk, just to keep cash running through the business. Is there a part of this with the price staying high that actually the high price is both due to the supply and demand dynamic, but it's also just to kind of keep that cash flow pumping through the businesses, to keep those cattle farmers moving, considering they've got that high input price?
I mean, you talked about commodity cycle in sheep earlier. I would say that's more prevalent in the cattle sector. The supply chain and that production cycle is around 2 years, with producers for their breeding herds and whether they cull or retain heifers, which has been a key factor of slaughter this year, and then the output 2 years later. Looking at the market in the round, you talk about £5 a kilo being the new level from a supply perspective, and this is true the world over. Really, supply is looking to be tighter for this year, and indeed out to 26, and I'd probably say further than that. The US is a key driver of that. This podcast is about UK cattle numbers, sheep numbers being at historic lows. It's even more acute, I would say, in the US. Their numbers are as low as they've been since the 50s, which, is putting a lot of upward pressure on cattle prices globally. The EU as well, the herd on the continent is shrinking, has shrunk, which all has implications for, trade with us, with Ireland, and feeds back to the UK market. So personally, I can't see, this might be sticking my neck out on the line, but I can't see the cattle price dropping significantly, just because that supply side dynamic, I would say, is so strong.
And the other thing I think then is linking that through to consumers, and we see, because of such a shorter supply chain in red meat, because there isn't any midpoint processing, you kill the carcass, you strip it, you cut it gets packaged, sold. I'm horrifically oversimplifying that there for anyone in the processing industry. I do apologise. But there is that shorter link. And therefore, from a retailer perspective, if we're seeing that stronger farm price, there is a greater link that we have then directly between the farm price and the retail price. And therefore, we've got to look at the demand side of it as well. And consumers are still going through a period of tighter budgets because of inflation, because of everything we've seen. In the headlines recently, there's been the news that energy prices are likely to increase again. And again, that's another thing that will help to restrict consumer spending. So we've got to balance this. We're talking about the supply side, but there is that demand side aspect to it as well. And that's the other part that balances the market. So yes, whilst from a farm perspective, price is definitely firm and supply is tightening, if that translates through to a stronger retail price, irrespective of the origin of the meat, we know that consumers will be turned off by high prices, and that lower demand is the thing that could start taking the heat out of the market and putting some caps on where it can go, because we want to push that price too firm, because all it means is that consumers then go to cheaper protein origins and move to chicken, etc., away from red meat, or even away from meat entirely, because of the price point. Again, a reason why, we said sheep was interesting for 2025. Cattle is interesting not only for 2025, but as you said, because of that longer production cycle, again, the next 2 to 3 years. So all we're really doing here, let's face it, is this is like in a film. When you get to the end of the film and you think it's going to finish, and all it does is set up for the next film, and it kind of leaves you disappointed that the film didn't come to a conclusion. So I kind of apologise if anyone was thinking, where's the point when they're going to give me that eureka moment? What we're really kind of saying is, we're probably going to speak about this again in a few weeks' time and kind of, see where we are. And then in a few months after that, this is going to be a long-running theme. We're going to milk this for all it's worth. No pun intended, and commodities there. Right, Hannah, I think we've spoken about cattle enough there, haven't we? I think we've covered off everything we were going to. So let's wrap it up for this first proper agronomics. We obviously had one on New Year's Day that was a bit more of a shorter wrap-up of what we're thinking is going to happen for the rest of the year. This is our proper one we're doing. And we've got to talk about our mystery music act, which we did get a few song titles in, so we did well with that. The act this week was U2. I've got beef with U2, The Edge specifically, because me and my brother went to see a Kasabian gig and The Edge said that they supported a crap football team. Obviously, I'm a Leicester fan, so I then booed. So me and The Edge don't get on, but we do appreciate, we were talking about sheep and we have the U pun. So U2 all the way through.